2025, what is going on with interest rates? Everybody wants to know, what does the crystal ball show? Are we going to have rates increase, decrease? There are so many talking points on both sides of the fence because you have people saying that inflation is coming down. It is very slow. It's been sticky, but it is slowly coming down. And with inflation coming down, rates should follow. They always do. However, we have other things that are kind of offsetting and making rates stay a little bit stable, if not even going up a little bit this year of 25 so far. So even though the Fed has cut the federal funds rate a few times now, we are not seeing the full effects of that into our interest rates. September of 2024 was the best rates we had seen in a long time. Rates had hit very low sixes, high fives. It was great. It was very short-lived. What happens is other news comes out and it affects the interest rates. Things like job reports, manufacturing, CPI. So inflation is not the only factor that affects interest rates. And for 2025, these are the two sides of the coins that we're hearing about. There are a lot of people in the market that believe that tariffs and deportation could affect inflation and make it worse. And that is causing some concern and making inflation kind of peak and not really come down anymore. However, it ticked up just a tad in the last 2 months. So what's the other side of the coin? Well, people believe that if we can get some energy of our own and we can drill and we can cut some spending in the government and things like that, that will help inflation. And as inflation comes down, rates will come down. Additionally, all of these rate hikes have not taken their full effect yet. So yes, we've had a couple of cuts, but prior to that, we had a year of hikes that took us from the 3s to the 8s in terms of interest rates. And those hikes have definitely affected the market. You have companies that have to lay off. They're not expanding. It costs them more money to borrow money. You have people who have credit card debt that is very high with high interest rates. So that is affecting their monthly budget. And when you have less money to spend, you do not do the things you would normally do when you have excess cash at the end of the month. So our economy has not seen the full effects of these hikes. And although the market looks like it's recovered and it looks like inflation is not moving as low as quick as we would like, and that's why we're not seeing the rates come down the way we want, we are seeing a slow trajectory down. And my prediction, if you want to know what I think, is that we will see rates come down in 25. The overall consensus is we'll see something in the low 6s. And I think if we could get there, that would just help so many people, and it does create more affordability. It enables people to maybe that are on the fence about buying, jump in. We know that every 1% reduction in interest rate, we have 5 million more buyers that are now able to purchase. And we also know that people that have a lot of debt or have home equity lines of credit or would like to take money out of their home and they're just waiting for rates to come down a little bit before they refinance, that could be a big mover for them. So the prediction is 2025, I think we'll see rates hit low 6s. I do think we'll see inflation continue to come down a little bit, and I'm hoping for a great year. If you are looking to make a move this year, or maybe you just want to refinance and you're just not sure what to do, or is it the right time, give us the call. I'd love to help you strategize and figure out what is the best move for you. Michelle, Oddo of the Oddo Group, give us a call.